Welcome into another edition of Market Takes. Look, I know you could have been anywhere in the world, but you were here with me, and I appreciate that. I am Dion Rabouin, reporter at the Wall Street Journal, and there is a lot going on this week in the world of markets and economics, but I'm going to tell you the three most important things you need to be watching out for this week, and it is a big one. Look, this week we got the CPI report, Consumer Price Index, the inflation report that's really most dedicated to what's going on with consumers, you and me, what we're doing, what we're spending, and how we're spending. That report is going to show us where inflation has landed. We get that tomorrow. We will be right here for Market Takes. I hope you'll be with us. Wednesday, the Federal Reserve meets the FOMC policy rate decision. That's going on Wednesday. We'll be right here again on Market Takes at 4 p.m. Hope you'll join us then as well. And then Thursday, we've got retail sales. So we're going to break down what all those are, what you should be watching for each one of those reports. Let's start with CPI. I want to put a chart up here on your screen to just kick things off with that. Now, we have seen inflation cooling since the middle of 2022. Now, you see there on your screen the chart rising. You see those bars getting higher. We reached 9% in June. And ever since then, really, inflation has been coming down on the CPI. But you've seen there towards the end, the bars not really moving significantly lower. You see a defined lower numbers on each of those bars, and then the last couple months have been right around 5%. 5% definitely lower than 9%, but very far from the Fed's 2% target, which we're seeing a more than double. So again, worrying that inflation could be stuck at this 5% level is what's got some economists a little worried about that. And that chart just illustrating, like we said, that inflation had been coming down consistently, but it stalled out there. And if it continues to stall out, that could be trouble. That could mean the Fed's got to do more, raise interest rates even more, do more to choke off and sort of slow down the economy. Economists, however, are expecting that CPI is going to come down 5 to 4% for this month, or at least for last month in the report that we get this month. 4%, which would be very bullish for the market and definitely bullish for stocks. Recent data, however, has suggested that inflation cooling trend that we have seen for most of this year could be slowing. We've seen home sales starting to pick up, particularly new home sales, reach the highest since March 2022 last month. We've also seen housing permits pick up, and home builder confidence actually reached a 10-month high last month. We have also seen inventory of expected homes 44% lower than it was pre-pandemic, or 44% lower than their pre-pandemic levels. We are also seeing business activity rising to a 13-month high according to the S&P Purchasing Managers Index, and retail sales rising surprisingly last month when we expected a decline. We will talk more about that in just a moment. So all these things have suggested the consumer continues to go out and spend. Folks are still spending money even though prices are still rising at a pretty fast clip. Remember, 5% inflation is still much faster than anything we have seen in the past 20 years or so. So prices still continuing to rise, and also those net profit margins. We saw for Q1, now that we've seen about 99% of S&P 500 companies report their earnings, we have seen profit margins rise again for most of those companies in Q1. If you want to continue to see growth for companies, they usually have to continue to keep raising those prices in Q2. So we will see if that is continued. Definitely CPI will be a report to keep your eye on. Also, you'll want to watch core CPI. That number has been higher while we have seen CPI continue to come down. Core CPI has held higher. Usually you need core CPI to come down or the Fed starts to get worried. Definitely something you'll want to watch out for. Which brings us to, of course, the next big thing to watch this week. That is the FOMC policy meeting, the Federal Open Markets Committee. That's where they decide what they're going to do about rates. Now, this month, it's not about the actual decision. It's not about is the Fed going to raise rates or not. The market is convinced the Fed is going to stop. The question is that a pause or a skip? Are they stopping because they're going to hold rates here at this level, or are they just pausing really quickly and then going to start raising them again starting in July? The market is not quite certain about that. We're locked in for a pause this week, but when we get the summary of economic projections, the dot plot, when we see the statement and we hear from Fed Chair Jerome Powell, that's what's going to move the market. So you're going to watch out for those. And again, we will be with you after that to break down everything that was said and everything that happened. We've seen some disagreement coming into this meeting. Some Fed officials say, look, inflation's starting to pick back up. They point to those home sales number. They point to the jobs growth. They point to some of these other data, business sentiment and all that. And they say, listen, inflation's going to pick back up. we've got to be proactive. Even if we stop here, we've got to start raising again in July, while some other Fed officials say, no, we may have already done too much. We've got to pause. We've got to make clear to the market that we're not going to do too much and really send the country into a needless and unnecessary avoidable recession. So that's what you've got coming in. CPI will be a big determinant of what that is and how Fed officials respond. And then we're going to hear from them on Wednesday. So we are going to get a chance to see what they say and hear what they think. And then, of course, we'll hear from the chairman at 2:30 on Wednesday. Markets no longer pricing in multiple rate cuts this year. In fact, markets are pricing in a rate hike in July. And then after that, we'll see. And we're going to get a lot of clarity on what that is going to be from the market. Want to show you one more quick thing and put a chart up here on your screen. And this right here, what you're seeing is the former FANG stocks, no longer called FANG. Obviously, Facebook is now Meta, Google is now Alphabet, but these big tech companies, that's Alphabet, Apple, Netflix, Nvidia, some of those bigger names that you've seen. This chart is actually made up of Apple, Snow, AMD, Tesla, Amazon, Netflix, Microsoft, Google, but you see that major significant outperformance there of those stocks, those big tech names, up about 50% over the past year. When you bring it into just so far year to date, starting from January, those stocks have risen more than 70%, while the equal weighted S&P 500, the S&P is weighted by the biggest companies have the biggest weights, but if you take that out and you say, okay, all 500 companies in the S&P 500 have the same weighting, well, that index has not risen but about 1% so far this year. And that is a significant difference from what we've seen from big tech, which is what leads the index, and that's rising by about 70% year to date. So this chart is illustrating the significant difference in overall performance of the market. Those big tech names having a huge year, the rest of the market not really, kind of being left behind. Last thing we want to talk about is US retail sales. I want to put one more chart up here. Actually, we've got two more charts, but first let's put this chart up here on your screen. This is the month-over-month change in retail sales. Now, if you look on that chart, you can see 4 of the last 6 months have been negative, and you're seeing a very choppy movement, right? You're seeing some months retail sales are down, some months they're up. Now I want to compare that to, let's show you the year-over-year change in retail sales. Well, there you get a much more clear picture of what's been happening. Retail sales have been slowing down consistently year over year. When you look at it, we're seeing a slowdown now to about 2.5% was the last reading, and this does not factor in inflation. So this is just how much people are spending compared to the year before. So even though prices are going up and overall sales are increasing, right? You're seeing more sales because prices are higher. It's just about how much money was brought in. Well, you're seeing a decline in retail sales. So even though we've still got inflation up 5%, last month you saw retail sales only up about 2.5%. And that shows you that you're seeing a defined and clear slowdown of the consumer. How much does that continue, or how much does that trend change? We will find out on Thursday. And that chart just illustrating what we had seen from retail sales coming in. So will consumers continue to spend? How will the Fed react to the CPI data? And what will the CPI inflation data tell you? We will find all that out this week. It is a big week, the rubber meeting the road in a big way. So listen, that's going to do it for us here on Market Takes. Thank you so much for looking forward to the week. With me, I'm Dion Rabouin, reporter at the Wall Street Journal. We will be with you tomorrow morning at 10 a.m. breaking down the CPI report. I hope you'll be with us when we do it again next time.